Do you understand the IRS's failure to file penalty? I'm Andrew Bosserman, tax attorney and founder of Boss Tax Law, and in this short video, I'm going to give a quick overview of the IRS's failure to file penalty. So the failure to file penalty applies when you don't file your tax return on time, and this can apply to individual returns, payroll tax returns, partnership returns, S corporation returns, all sorts of returns from individuals to businesses. And the penalties will differ in certain situations, but for individual returns or returns where you actually owe money on the return, the failure to file penalty is 5% for every month or part of the month that your tax return was late. And it caps out at a maximum penalty of 25%. And that percentage amount applies to the amount you owed, essentially, or the amount of the unpaid tax at the time that the return should have been filed. So, for example, say your tax return was due April 15th and the amount of the unpaid tax was $10,000. You file it, a year late, so the penalty is going to max out at that 25% amount because that it's 5% for every month or part of a month. So after 5 months, it maxes out at 25%. If you file your tax return a year late, that's more than 5 months. So then it's going to be 25% of the unpaid tax, which in my example is $10,000. So you would owe a failure to file penalty of $2,500. So as you can see from this example, the failure to file penalty can really add up quickly and be a substantial, extra amount owed if you don't file your tax return on time. But one common misconception is that, if you file your return late and are due a refund, you might still owe a penalty, but that's actually incorrect. The failure to file penalty is only if you owe money because the penalty is based on the amount of the unpaid tax. For example, if you file your individual return late, but we're due a refund from the IRS, there's no penalty. Essentially, the government got, a few extra months use of your money until you file the claim for a refund. So it will only be when you owe amounts. That's what the failure to file penalty is calculated on. But there are failure to file penalties for other information returns. So this can be, 1099s, W-2s, but it also applies to other business returns like partnership tax returns or S corporation tax returns. So those penalties for partnership and S corp returns, it's $220 per partner or shareholder for every month that the return is late. So as you can see, if you have a business that has a number of owners and the return is filed late, a partnership or S corp return, then this failure to file penalty for partnerships or S corps can add up substantially. So, it is extremely important that you file your tax return on time, even if you file an extension, because if you file an extension and then file your return after the extended due date, the penalty is going to be calculated from the original due date. So best course of action, always file and pay your taxes on time. But say you were unable to file on time and you filed late and were assessed a penalty, all hope is not lost. There are ways to get the penalty abated, which means removed. And one of the most common ways is by arguing reasonable cause. Essentially, I did everything I could to comply and file my tax return on time, but I was unable to due to some circumstance outside of my control. And common reasonable cause arguments and ones the IRS often accepts are, say, death or illness of yourself or a close family member, It could be, a fire, flood, other natural disaster in your area that affected you. It could be things like your inability to get critical records to prepare your taxes, or even sometimes some sort of tech issues. It could be you did everything you could, but the software you're using had a glitch and didn't file it on time, or some other situation like that. So those are common reasonable cause arguments, and you do have to generally write a letter to the IRS or file a Form 843 to request penalty abatement and give them a narrative explaining why you believe you qualify for reasonable cause, along with some supporting documentation. So, for example, if it was due to a death in your immediate family, you might provide the death certificate or a doctor's note for an illness, or evidence there was a fire at your house and destroyed your records, evidence like that. But other common scenarios that don't usually qualify for reasonable cause, although there can be exceptions. Oftentimes if you say hire a CPA and they were negligent and filed your return late, generally you can't recover for things like that. So generally, reasonable cause will apply, and you can get the failure to file penalty removed if it's you did everything you could, but circumstances outside of your control didn't allow you to file your return on time. So that is a quick overview of the failure to file penalty. I work with many taxpayers to try and get failure to file penalties along with other penalties abated when they do incur them. So if you have any more questions about IRS penalties, or if you think I might be able to help you or someone else feel free to reach out.